What can you tell us about the meeting today?
Well, we're talking about energy, about this new industry called AI factories and artificial intelligence. And obviously, we're at the beginning of a new industrial revolution, and this industry is going to be producing intelligence. And what it takes is energy and, of course, a lot of great computer science and large computing systems that Nvidia makes. And so we've got to make sure that everybody understands the needs coming, the opportunities of it, the challenges of it, and do it in the most efficient and scalable way we can.
In the world of high-stakes investing, few stories are as electrifying as Nvidia's recent roller coaster journey. Imagine a tech giant that holds the pulse of the artificial intelligence revolution, yet finds itself swaying like a leaf at the mercy of macroeconomic data and investor sentiment. Could Nvidia, the AI superstar, be teetering on the edge of a risky precipice? Or is there a golden opportunity hiding in its volatile stock movements? Is this really the beginning of yet another monumental and brand new industrial revolution like Jensen Huang would have you believe? Or is it more complicated than that? As leading economic figures and tech moguls like Federal Reserve Chair Jerome Powell, Alphabet's co-founder Larry Page, and Tesla's CEO Elon Musk watch closely, so do legions of investors, each day marked by nail-biting anticipation and remarkable market moves. Welcome back, everyone, to Investocracy.
Do you see the need for a federal role here in terms of federal investment in combination with private investment?
Well, there's probably going to have to be public-private collaboration in this area because the rate of growth is really quite high. Although artificial intelligence consumes a lot of energy to train, it also saves a lot of energy when you consume it. Because ultimately it's not about training the model, it's about using the model. And whether it's in healthcare or climate technology or just running the power grid, artificial intelligence has the opportunity to really save a ton of energy. And so I think people are grappling with the scale of the opportunity ahead, and of course the scale of the challenges ahead. And so it's going to require public and private collaboration. Yeah.
Do you think the U.S. is doing enough at this point to be competitive with China and other countries?
Well, this administration is determined to do the most and do it the fastest, and that speaks volumes about the reason why we have this meeting today. And so it's really great.
Nvidia's stock journey over the past year reads like a market thriller. From an all-time high on June 20th to its frequent swings of over 5% in 15 sessions, Nvidia's market cap has seen jaw-dropping fluctuations. Such volatility is rare, even for a tech colossus nearing a $3 trillion valuation. But why the wild ride? The semiconductor sector, historically known for its cyclical ups and downs, is nothing new to Nvidia. Demand for chips waxes and wanes along with the economy and technological advances. The recent chip surplus, driven by peaks in device sales during the pandemic, followed by a sharp correction, underscores this cycle. Nvidia wasn't immune. Its stock soared during the pandemic, crashing nearly 70% from its peak in 2021 to late 2022, reflecting similar patterns seen in previous years. Interestingly, rumors and macroeconomic signals seem to be potent triggers for Nvidia's stock swings. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Well, you know, if this country doesn't have the money, I don't see anybody else in the world that can possibly take advantage of this incredible new industry. And so, you know, I think people are starting to realize that AI is not just a new computer science. It's a new way of doing software. It's going to, of course, revolutionize the computer industry, but it's going to create a whole new industry that sits on top of it, that produces intelligent skills and produces knowledge. And this industry is going to be quite large. It's going to be hopefully the most exciting of the new industries that the world's ever seen.
Can I ask you a quick question about export controls? Is there any policy, U.S. policy, that you would like to see changed in order to make sure that you're able to make sales overseas?
Well, export control and national security, industrial resilience, supply chain resilience, all of those matters are really complicated, and this administration understands the nuance of it, and so We would like to see, of course, the U.S. industries be as vibrant as possible, to export American standards all over the world, and to have the rest of the world be built on American standards. Of course, national security, incredibly important, and we have to safeguard all of that at the same time. And so this is why policymakers have such a difficult job. They have to balance all of these various requirements and make sure that we have a great policy that somehow balances and keeps all of this up in the air and thriving. And so I think the most important thing for us is just make sure that we inform the administration on what we know about the technology and the industries that we're cultivating, and 100% make sure we comply with the policies.
On August 23rd, a statement by Jerome Powell about potential interest rate cuts sent Nvidia stocks roaring by 4.5%. Yet, a weak unemployment report weeks later caused a 4% decline. However, a cooler-than-expected inflation report on September 11th brought an 8% surge. Nvidia's stock, it appears, is a barometer of economic sentiment, with a dash of unpredictability. Here's a lighthearted take amidst the tension. Why don't stock investors go broke overnight? Because it happens by liquidation. But jokes aside, let's delve deeper into why Nvidia's current scenario is unlike any before. Nvidia's financial performance has been nothing short of phenomenal in recent quarters. Revenue has tripled, and profit margins have soared past 60%, a feat that seems unbelievable to its rivals. The AI wave, spearheaded by products like ChatGPT, demands Nvidia's high-performance GPUs. Companies like Google's Alphabet and Elon Musk's Tesla are in a relentless race, each seeing Nvidia's tech as pivotal to their AI ambitions. As Musk succinctly put it, ensuring a constant supply of Nvidia GPUs is crucial. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Anything you can tell us about what's next for NVIDIA?
Well, we're in the process of going into our starting the production of our new generation called Blackwell. Every single generation, we try to increase the performance tremendously, and when we introduce new generations and the performance is 3-4 times higher, we're essentially reducing the cost of computing and reducing the cost of artificial intelligence by the same factor. And so each generation reduces energy consumption, increases performance, reduces cost, and so we're in a hurry to get to Blackwell. We're in full volume production of Blackwell, and every company in the world is chomping at the bit, for us to ship it to them.
Even Nvidia's CEO, Jensen highlighted this insatiable demand during the Goldman Sachs Communacopia and Technology Conference. Instead of typical CEO concerns like competition or economic headwinds, Huang worried about meeting the overwhelming customer demand. Nvidia's worry isn't demand, it's how to satisfy its voracious customer base. Unlike past cycles where oversupply could drastically reduce demand, the stakes in the AI race ensure a continuous craving for Nvidia's groundbreaking chips. Meticulous analyses reveal that while the semiconductor sector ebbs and flows with economic cycles, Nvidia's current standing is exceptional. Recent supportive tweets from industry leaders and economists underscore this. Even Meta's Mark Zuckerberg fueled confidence, noting, "The risk of underinvesting in AI far outweighs the risk of overinvesting." It looks to be just as we all predicted, and exactly like how Jensen Huang would want us all to believe. We are possibly on the verge of yet another industrial revolution in the tech sector spearheaded by Nvidia's AI chips. And as Nvidia's journey continues, the narrative unfolding is a blueprint of opportunity amidst volatility. Despite fears tethered to macroeconomic trends, the company's robust business model and soaring demand place it on a unique pedestal within the semiconductor realm. Investors eyeing strategic entry points might consider these turbulent times as golden opportunities. Capitalize on stock dips triggered by recession fears to invest in a titan powering the AI revolution. Currently priced well within reach for strategic buys, Nvidia's forecasts predict continued growth, driven by insatiable AI hunger and buoyed by strong endorsements from tech juggernauts. Nvidia epitomizes resilience in the face of economic tremors, adapting and thriving, powered by the very innovation it's helping to cultivate. So, what do you think? How do you perceive Nvidia's volatile yet promising trajectory in the stock market? Let's delve into this conversation. What's your take on seizing such fortuitous market moments? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.